Buy now, pay later schemes are dangerous.
And if it's Afterpay, I'm gonna pick it every time.
Juniper Research estimates that these transactions could reach almost $700 billion by 2028.
Okay, so today we're going to be going a little bit more in depth with the term phantom debt and buy now, pay later companies. We've seen them in the credit card debt videos, and I've told you guys how much I don't like them. But today we're going to be looking at a video titled How Phantom Debt is Haunting American Consumers, along with some other clips that I found and comments from you guys from previous videos. So if you want to be featured on a future video, leave it in the comments down below, but let's just jump right into it.
You've probably seen the option at checkout to split a purchase into separate interest-free installments.
Buy now, pay later is just a way of spreading out the cost of a purchase over a few installments. Usually it's 4 at 0%, so it's pretty attractive for a lot of people.
The number of buy now, pay later loans increased nearly 1,100% between 2019 and 2021. That rapid growth has some analysts concerned because where there are loans, there's debt. But exactly how much debt is still unclear.
We've often referred to this as phantom debt, where it's sort of flying under the radar and not really something that anybody has a good grasp on.
Our back of the envelope estimates put the BNPL market at somewhere in the neighborhood of 50 billion. So you're talking comfortably a third of the transaction increase in credit card volume.
That could imply that households are more in debt than we even know because we're not really measuring this booming space of buy now, pay later.
With the amount of TikToks we've seen on this channel saying they use BNPL for trips, cruises, items they wouldn't be able to purchase otherwise. But soon after that, of course, comes with the bill. And if you don't have self-control to save up for that trip or the expensive item that you wanted initially, how are people going to have the self-control to have all of that money for the payments when the bill comes? And that's exactly how they get you, because then the late fees come in and all the interest rates and just snowballs from there.
I think you could be missing or misrepresenting how healthy the consumer is.
The notion of this phantom debt being out there is just not true. We know from publicly reported information how many folks are taking out loans and how many of them default, and it's a very, very low number.
Buy now, pay later users are more financially vulnerable. It's those users who are using buy now, pay later more frequently for household goods, for essentials. So that type of user and that type of pattern is the big concern.
Here's why phantom debt is looming over U.S. consumers and the economy.
It was first called phantom debt in this Wells Fargo report that called attention to the fact that there is no hard measure of how many buy now, pay later loans are out there, how consumers are doing with these loans, whether they're really keeping up with their payments or falling behind.
And this is clearly not a good sign. We've seen many people's excuses that they just don't pay attention to their finances, what's coming in and going out every week, every month. Then unfortunately, that just turns into mountains of debt. Now we have a service that's difficult to track that so many people are using. Now, if we can track the household consumer debt right now, which just increased to $18 trillion, how much more could be added with these loans? Because how popular has it gotten over the past few years? I do also find it interesting that almost everybody in this video says that this could be a very bad thing, except the one person who is the CEO of the FTA, which you'll see in a little bit represents most of the biggest buy now, pay later companies. So of course they're going to say nothing's wrong, there's no problems at all, because they're profiting greatly from these loans.
Not having a clear read of underlying debt burdens in general, particularly for the household sector, can be a concern because you could be assessing the health of the household sector and looking at debt to income ratios, net worth being higher across the income spectrum, income growth, all of these variables that suggest that the household sector and consumer in general are actually doing fairly well despite elevated inflation and challenges in the broader economy. But if you're missing a piece of that puzzle, right, if you're looking at all of household debt and thinking it's all household debt, but there's this other component that's lurking in the background of this phantom debt buy now, pay later segment, I think you could be missing or misrepresenting how healthy the consumer is.
The most recent information comes from data disclosed at the discretion of individual buy now, pay later companies, as well as various privately conducted consumer surveys. This lack of centralized data has made it difficult to reach a consensus about exactly how much high-risk debt is out there.
Since buy now, pay later loans are not currently reported to the major credit reporting agencies, it's a challenge for lenders to know how many loans a consumer has outstanding and how well they're doing paying back those loans.
So most of the data being put out from these BNPL companies are put out by themselves. Of course, they're going to try to make them look as good as possible, because if they came out and said, yeah, the interest payments are killing people, all the late fees when they don't pay, that's what keeps all of our companies afloat, raking in tons of profit, I bet there would be some sort of public outcry and change. And now other lenders can't even keep track of how much debt people have, so it just seems like it's a house of cards.
According to Afterpay, one of the major 5 buy now pay later companies, 98% of their purchases did not incur a late fee as of the fourth quarter of 2023. The Financial Technology Association is a trade group that represents 4 of the largest buy now pay later providers: Klarna, Afterpay, Zip, and PayPal.
I do think the concern over phantom debt is overblown. When you look at the industry, even under Wells Fargo's own report, in which they estimate the buy now, pay later industry to be around $45 billion, less than 2% are in default, or what we would say not making their payment. 2% of $45 billion is less than $1 billion. Compare that to over $1 trillion worth of credit card debt. And so I think we need to put it in perspective.
But a 2024 survey by Harris Poll on behalf of Bloomberg found that 43% of consumers who owe money to buy now, pay later services said they were behind on payments.
Okay, so I'm definitely not trying to defend the credit card companies and the banks. With all the debt racking up, I think that's pretty apparent on this channel. People having huge credit limits and sometimes 30% interest rates on these credit cards. It is just, if not more dangerous than Klarna and Afterpay. And I bet all of the credit card companies and banks are just angry that consumers are using other methods instead of their credit cards where they could possibly get more interest, and that in turn makes them even more money. But the huge difference between the survey of 43% saying that they were behind on payments and then just the 2% that Afterpay figures came out with is pretty huge. So if we just take that info, the 2% of people not paying back their loans, then how insane is this debt still if just 2% could prop up all of these BNPL companies? It's not like this is a charity, this is a for-profit business, and it probably gives the incentive for these companies to up it to 3% or 5% of people not being able to pay back. Partnering with online shopping sites using Klarna or Afterpay on any item you want with just a couple of clicks, and it's at your door and it costs 1/4 of the price in your mind. In reality, it's not really the case, but now you could just buy even more.
Consumer Reports also conducts surveys on the issue.
We found in one of our surveys that the top reason for using buy now, pay later was to purchase something that the consumer couldn't otherwise afford. So it's clear that buy now, pay later, it can lead to consumers making purchases that they can't repay and then running behind on payments, which then triggers late fees and also just leads to greater accumulation of debt.
Buy now, pay later is similar to layaway programs that became popular during the Great Depression. Retailers were aware of how little cash Americans had, so they created pay structures where the consumer would give a down payment to a retailer in order to pick up an item and then make payments in installments. Layaway began to decline in popularity in the 1980s and 90s when credit cards became more widely available. Buy now, pay later doesn't seem to be going in that direction. Juniper Research estimates that these transactions could reach almost $700 billion by 2028.
So I do know that some people are using these companies because they can't afford their necessities, their groceries. It's not 100% people going out and buying expensive designer clothes that they really don't need or taking trips. Either way, this is not a good situation. You have one side living way above their means, possibly not being able to pay it off, and the other one using these loans just to be able to survive. Again, possibly still not being able to pay it off and getting into tons of debt just to live. But this seems to be the new online credit card version of layaway, but you could get the item right away instead of getting it when you paid in full, still bringing that instant gratification into play in the modern day social media world. I mean, they said it themselves, buying something you couldn't otherwise afford. And now you don't even have to leave your house. You could just sit on your phone. Then being estimated to grow to $687 billion seems like it would catch up to the credit card problem we have today.
The Wells Fargo report concluded that the buy now, pay later market may be small now, but we don't know how fast it's growing. It logically follows that we simply cannot know when it will be a problem.
Just some sort of nationally measured data would be so helpful just to understand really just how big of a burden this is for households. One of the challenges with this source of borrowing is just how unregulated it is. So to my knowledge, there's not many questions that are actually asked before you're offered a buy now, pay later option when you go to check out.
Buy now, pay later companies generally don't report information to the major credit bureaus, which means these loans typically aren't reflected in people's credit scores.
If someone falls delinquent on one of these loans, it will show up in a bankruptcy report, but that's the only way it shows up on a consumer profile.
There's currently no formal way for economists, regulators, and analysts to know how rapidly buy now, pay later loan debt is growing, which could lead to unforeseen economic consequences.
Because that doesn't sound shady at all. And I know a lot of these reports are being published by banks who would 100% do the exact same things that these BNPL companies are doing. They're just mad that they can't get a piece of the pie and start making money off of people who can't really afford to buy an item in full, whether it be instant gratification or just surviving. But how fast these companies have been ingrained in the world of online shopping, basically since the beginning of COVID, just 5 years, who doesn't know what these companies do now? And people are just willingly lining up just to go in debt so they could buy a new iPad or TV or a trip that they can't afford. Or again, a even worse situation, just to be able to survive the absolute necessities, groceries. But that situation is not better. That just turns into the horrible cost of living that we have in today's world.
In order to fully or accurately assess the health of the financial sector, you have to accurately understand how much of a debt burden is out there and how that's manageable against the income side for households generally. The biggest challenge is that regulators just don't know how much exists. So I think you have regulators trying to regulate this segment similar to credit card debt, even though it's not equivalent, just to, again, wrap their hands around it and have it monitored so that it isn't an area of financial instability from a household debt perspective.
This lack of scrutiny about whether a consumer can pay back a loan could have consequences for the lenders as well. Credit scores try to provide an objective assessment of how likely a person is to pay their bills. The average FICO score in the US was 715 in 2023. Lenders use these scores to set the terms of a loan, which could dictate the spending power of the American consumer. Having buy now, pay later activity separate from the current credit check system prevents lenders from having that data to make an informed decision about whether a consumer is likely to default on the loan.
I will say though, with or without the BNPL loans not being able to be seen by other lenders, the rates are still just absolutely terrible right now. If you don't have to right now, I would 100% wait it out, because if you're in the market to borrow from one of these companies, I mean, especially if you are around 700 or less, the rates and interest you're going to pay is going to be absolutely insane. Perfect borrowers are seeing 7% on houses right now. I'm pretty sure it's very close in the new car market, and used is above 10%. It's just not the time to borrow in general.
But incorporating this data into credit scores can get complicated.
We believe that somebody consistently paying $25 over the course of 4 weeks or 6 weeks, consistently, responsibly, on time, should be able to score positively. Unfortunately, today, every time you take out a buy now, pay later loan, it looks like you've maxed out your credit. And so unfortunately, it's scored as a negative. So we believe that these products are consumer friendly. We believe they should enhance consumer scores, their credit history, and their scoring. We have been actively working with the credit rating agencies to be able to think through how to modernize their own scoring to be able to capture that better. But that's still a little ways away. They're just not there yet. And there's also consumer protections built into the buy now, pay later products. If you are late on a payment, you are paused until you complete your payments. That's different than one in which you're able to have a revolving debt and pay interest on it.
Okay, so I guess they're trying to make the argument that they're like a secured credit card and that these loans should also build your credit score back. I don't really know about that because secured credit cards need a cash deposit, and then you obviously have a max amount that you could spend. If you put $500 in or $1,000 in, you could only use that much. It doesn't really seem like it's the case with these loans. You could buy until your heart's content, and you could get into a situation where you wouldn't be able to pay it back. And at that point is when you'd be frozen out by these companies and you won't be able to take out another loan because you clearly wouldn't be able to pay it off.
The caveat to those safeguards is that the companies don't communicate with one another. If a user is behind on a loan from a specific buy now, pay later company, they can still take out a loan from a different one.
That's problematic because if you are a consumer who does rely on buy now, pay later and who has maybe a few outstanding installments, that would go against, right, how much more leverage you can take out or how much more a lender or provider would be willing to lend you money just based on your debt to income ratio generally. So I think it's problematic in that it doesn't show up in the credit profile for lenders because it's sort of they're taking on a risk that they're not aware of potentially.
While there is not currently a solution for tackling the credit score mismatch, the Consumer Financial Protection Bureau issued an interpretive rule in May of 2024 that says buy now, pay later firms must comply with certain U.S. credit card laws.
It's recognizing buy now, pay later as a form of a credit card.
So that regulation means that the industry must make refunds for returned products or canceled services. They need to investigate merchant disputes and pause payments during those probes, as well as providing bills that have full fee disclosures so customers know exactly the interest rate or the late fees that could apply.
I honestly did not know that BNPL lenders didn't abide by these laws before. One of the nice things about paying with a credit card is that you get these protections, especially shopping online. With how popular it is nowadays, the amount of scams all over the internet, I mean, something can pop up every single day, whether they send you the wrong item on purpose trying to scam you, or shady sites will send it to the wrong address on purpose, but it'll still say delivered on the shipping information, so there could be problems there. I mean, there's a million different things that they could do. So being able to open up a claim with a credit card company could really help you out. And I think the BNPL company should be held to the same standards because people are really using these lenders like a credit card in today's world.
Most experts say that this new regulation just doesn't go far enough. It's really just the tip of the iceberg because it doesn't get at the bigger problem, which is how to account for this phantom debt. If these buy now, pay later providers are compelled to report their data to credit reporting agencies, then we would have this central agency monitoring the ballooning space of buy now, pay later.
We think that the CFPB really needs to go further and require buy now, pay later providers to assess a consumer's ability to repay and to have reasonable late fees. In general, we're very concerned with consumers becoming more and more overextended, especially in these current times with inflation and economic pressures. It's showing in increasing credit card delinquencies, and it's showing in the consumer surveys of buy now, pay later users who are increasingly missing payments.
There are a lot of new initiatives in the space because it's been so popular. I mean, it's clearly not going anywhere. We're going to keep seeing buy now, pay later. It's just a question of whether consumers are going to be able to keep on top of it.
So of course these BNPL companies don't want to be fully transparent because it's just another predatory tactic to lure in a whole bunch of people who just want to buy and consume as much as they can, just like the credit card companies. And I don't 100% blame Klarna or Afterpay. It's definitely the consumer's fault as well. If we didn't use these loans, these companies wouldn't exist. But we could head over to the comment section of this video. Why do I feel like this video is less about consumers complaining about BNPL and more about banks and Wall Street complaining about others cutting into their exclusivity in the debt transaction market? That's what I was saying earlier. I know that this is definitely a problem, but a lot of the articles coming out that we saw were the banks that couldn't be a part of the buy now, pay later space because, 100% they would in a second just to make a little bit more money off of each one of their customers. Finance people are pure artists of how do we make money from people who don't have money. A lot of people ended up seeing that as well. All of a sudden we care about debt. Nope. This is banks feeling left out since they want to be the ones giving the very same loans. The things you own end up owning you. Your research seemed to have missed the fact that layaway meant you didn't pick up the item until it was paid in full. That was the difference that I was saying. With the Klarna and installment payments, you still get the item right away. It's shipped to you. But layaway back then, you still had to pay for it in full. It was just held for you until you had all the money. Very different. Still brings in that instant gratification today. I think this skirts the real problem, the fact that Americans need to take out loans to buy necessities. Because I know a lot of this channel is people living way above their means, but some people are just using these installment payments to survive, which honestly is just as bad of a situation, if not worse. And that goes hand in hand with a comment from one of you guys. When BNPL apps starting allowing people to put groceries on Afterpay, we're in deep. And is why I'm just not a big fan of this at all. This is a way to get into a ton of debt and then psychologically think that you're not spending as much money because you're doing it in installment payments. So that $100 item is only $25. It's not really the case in the end though.
I got a few comments like this, so let me just explain why using any buy now, pay later service, if you do not absolutely have to, is just not ideal. The first reason and most obvious is because you are taking on debt when you are choosing to buy something now that you are paying off later. The thing is, as soon as something happens to where you need that money later for something else, like an emergency or something like that, that you promise to pay back for your online shopping, that's when missed payments happen, which leads to fees, which leads to more debt, and the cycle continues. Another issue is people are not looking at buy now, pay later services as taking on debt. And that is exactly what you are doing. So yes, if you have an absolutely perfect record of buying low cost things, putting them on a buy now, pay later service, and making your payments on time every single time and having nothing else come up, then sure, you may not have any negative consequences, but let's be real. Emergencies and unexpected expenses are almost guaranteed to happen at some point.
That's honestly what I end up thinking, just kind of kicking the can down the road. If anything comes up in your life, you absolutely need the money for some sort of an emergency, then you start getting the late fees and all the random hidden fees, administration fees, and then the interest starts rolling in and could absolutely destroy your finances. Here we have a comment from one of you guys. I finally finished paying off my buy now, pay later. Closed my accounts and am never looking back because they kept giving me higher limits that I actually didn't know was a thing. Maybe certain companies do give you a limit, but like they just said, very similar to the credit card companies that know when people get into a ton of debt, they'll just keep increasing the limit over and over again, planting that seed that, oh, you could buy even more. It's okay. Just keep on consuming. And then they will never get out of debt. There's no way I would have been able to pay those back if I kept using them. I was always broke, having to keep up with those little payments on multiple purchases. Could just snowball into something that they can't dig themselves out of.
Another thing people are saying is, well, I only spend a small amount of money on there, a couple times a month or once a month, or I do have the money in my bank account to buy it. I just choose not to. Here is the problem with that. Buy now, pay later services give you the illusion that you are spending less money than you actually are in order to get you to spend more. If you are uncomfortable spending that $200 right now, even though you have it in your bank account, why would you split it up into $50 increments? Because it makes you feel better, because it makes it seem like you're only spending $50, even though you're spending $200. Keep in mind, services like this, just like credit cards, are not available just to help you out. They are available and they work because they make the companies money.
I mean, these are dead on the exact same reasons. It's not like they're charities. Clearly this is working and somebody's paying these bills, the crazy interest rates, to keep all of these companies afloat and not just barely survive. They're profiting greatly. How big have these companies become in just the past 5 years? But a comment from this video said it exactly. It just hurts less to split it. I know it's the same amount, but I never buy more than one thing at a time. But that's definitely not the case for everybody. Exactly, which makes you more likely to spend more money than you normally would.
But unlike a credit card, you're not getting any points or perks or anything at all for using them. Even credit cards, whether they give you rewards or not, are not right for everybody because of how easy it is to get into a cycle of debt. So if you are going to purchase something that you have the money in your bank account to buy and plan on paying it off by the end of the month, use a rewards credit card. At least you are getting cash back, travel perks, so many more benefits than the zero benefits you get from buy now, pay later services.
That's basically the only real excuse that I'll see in comment sections in favor of these BNPL companies, is that they always pay it off. I never get any late fees. I have a perfect record. But if you were really truly like that, you could just end up using a credit card, never have any late fees, never accrue interest, pay it off in full every month. And then on top of it, get rewards, get miles, get cash back. You could get points for gift cards. I mean, there's a million different things for all of these credit cards out there. So if you are truly on top of your finances, you probably could make a little bit more money if you just ended up using a credit card. A couple comments from you guys in my credit card debt video. I bought a new phone and a motorcycle. I put money aside every month. It took me a year to save up, and this is better than the buy now, pay later or vehicle loans. And unfortunately, it's pretty rare for that to happen in today's world. And the buy now, pay later numbers must be insane, like we saw at the beginning of this video.
Buy now, pay later schemes are dangerous, and yes, I know a lot of people are going to say, well, it's interest free or it helps with cash flow, but that's exactly what they want you thinking. And even if you are sensible with your money, you're still more likely to buy more stuff. And I know that for a fact because that's exactly how Klarna advertises to businesses. It says you'll get a 45% increase in the average order value if you use us, which means that you as a retailer get more people to buy more stuff. If you are buying more stuff, that means you're not putting money away for investments to build your future wealth, and it also means that you might get addicted to kicking the payment can down the road as well, and then end up not being able to afford what you've bought on buy now pay later, and you end up paying the much higher interest, because nobody ever uses buy now pay later schemes just once.
And there you go, 45% increased sales. That's why all of these companies have partnered with any online site you could think of now. Almost 50% more transactions just because people have installment plans. That's a very dangerous game. But unfortunately, I could say the exact same thing over and over again in all of my videos, and we'll still get people like this online that are just a few missed payments away from being in massive debt.
And if it's Afterpay, I'm gonna pick it every time. If there is an option for Afterpay, I'm clicking it. I don't care how much money I have. I don't even care how much the product is. If it's $5, then I'm paying 4 payments of $125. They literally made Afterpay for us girls. It's girl math. We like, okay, so if I have to break this up, it's really like I'm not even paying for anything. Am I right? They need to start doing Afterpay for cars, houses. I'm gonna pick it every time. Because what? You mean to tell me that I can pay this later? Oh yeah, I'm gonna pick it.
Oh, okay. Well, I think I've had my fill for this type of content today. So that's all I got for you guys today. Let me know what you guys think in the comments down below. YouTube thinks you'll like this video popping up on screen right now, but hopefully you guys enjoyed this video. If you did, please leave a like, and I'll talk to you guys later.